Welcome to The Explainer, where we break things down. And boy, do we have something to break down today. So gold was absolutely on a tear, hitting new highs. And then, boom, it just fell off a cliff. We're gonna dig into what's behind this massive price collapse that seems to have come out of nowhere. So yeah, the big question, the one you're probably asking yourself right now, is this just a little blip, a healthy pullback, or is this something bigger, the start of a real reversal? That's what we're here to figure out. Get this, we're talking about an 18% drop from its peak. I mean, that's huge. A massive slice of this year's gains just gone. It's got everyone scratching their heads wondering, what in the world just happened? All right, so let's put on our detective hats, because this really is a mystery. We've got conflicting clues, a lot of confusion. We're gonna follow the trail and see if we can piece together what's really going on with gold. Okay, so first stop in our investigation, the technicals. We're looking at the charts. This is where the pros, the technicians, look for patterns and signals in the price itself to try and figure out where things are headed. And what are those charts telling us? Well, to put it bluntly, they're not looking good. We're seeing a lot of red flags. If you're someone who lives and breathes price action, the charts are screaming that the pain for gold might just be getting started. So warning sign number one is something called a double top. It's a classic, and it's pretty much what it sounds like. The price shoots up to a high, pulls back a bit, tries to get back up to that same high again, but fails, and then it drops. And here's the kicker. We saw this exact same setup right before big drops back in 2011, and even way back in 1980. So history tells us to pay attention. All right, clue number two is maybe even more important. Gold has officially fallen below its 50-day moving average. Now for traders, this is a big deal. As one analyst, Gary Wagner, calls it, it's a major line in the sand. You know, once you cross it, the whole mood can change. It's a pretty strong signal that the bulls are losing control to the bears. Okay, so the charts look pretty scary, right? But, and this is a big but, this is where our mystery gets really interesting. Because what the charts are telling us seems to fly in the face of, well, everything else that's happening in the world. So yeah, the technicals are pointing straight down. But what happens when we look away from the charts and look at the real world? You know, the fundamentals, the economy, politics, all that stuff. And this is the paradox, the real head scratcher. We've got major geopolitical conflicts heating up. Inflation is still sticky, around 3.4%. The US deficit is over $1 trillion. And on top of all that, central banks are buying up gold faster than they have in decades. I mean, seriously, any one of those things should be like rocket fuel for gold. But instead, it's falling. It just doesn't add up. So you see the problem, right? We have this massive divide. It's like two different stories being told at the same time. The charts are screaming, sell, get out, while the real-world fundamentals are shouting, buy, this is the perfect time. And that conflict is right at the heart of this whole mystery. So what gives? How can both of these things be true? Well, the answer, the key clue, might not have anything to do with gold at all. It might actually be found in another big-time commodity. So while gold's been taking a nosedive, take a look at crude oil. It's been spiking. And guess what's driving it? The exact same geopolitical stuff that should be boosting gold. This kind of suggests that maybe, just maybe, big money investors are looking for their profits somewhere else right now. And this is where we get a really interesting plot twist, courtesy of analyst Gary Wagner. He's got a theory. What if the big players, we're talking the huge hedge funds, haven't actually lost faith in gold? What if they've just made a strategic short-term move? They see all this volatility in oil and think, hey, we can make a quick buck over there, so they're shifting their money from gold to crude. So if that's true, it changes everything. It means this isn't about people suddenly hating gold or thinking it's not a safe haven anymore. Nope. It's just being put on the back burner for a little while, you know? Sidelined while the big traders go chase the action in the oil market. All right, we've looked at the evidence, we've heard the theories, so where does that leave us? It's time to put it all together and try to reach a verdict. And honestly, when you lay it all out, the jury is still out. The case is pretty much split down the middle. The argument for this being just a correction is strong. You've got those rock-solid fundamentals, but the case for a full-blown reversal is also compelling. You can't ignore that broken support level and the big money moving into oil. It's a real tug-of-war. So with so much uncertainty, what do you do? Well, all eyes are now turning to one very specific number. One price level that could be the tiebreaker, the thing that finally tells us which way this is going to go.
And that magic number is $4,568. Why that number? Well, it's a key support level based on the last big rally. For the chart watchers, it's simple. If gold can't stay above that price, it's a really bad sign. It's basically the final line in the sand. A break below that, and it's pretty clear the bears are in charge.
Which brings us right back to the central question. What's going to win this fight? The scary-looking charts or the super strong fundamentals? Right now, we just don't know. We're watching this incredible battle play out, and believe me, the next big move for gold is hanging right in the balance.